So our house view, we're looking for 25 basis points of cuts at each meeting, so about 75. Market pricing is a bit aggressive at 100 now. They're looking for a 50 bip somewhere. I think currently, the labor market, isn't sort of falling off a cliff. If you look at jobless claims, employment intentions, those are still holding up fairly well. So I think for a Fed to sort of move at the 50 in September, you do need a very weak payrolls report this Friday, and our US team just doesn't see that yet.
I'm just reading here that the governor of the BOJ wrote a letter to the Japanese government explaining his decision to raise rates in July, and the BOJ will continue to raise interest rates if the economy and prices perform as expected. We've been tracking the Japanese yen. What do you see?
So I think, Ueda sort of brushed off the August meltdown. Now financial markets conditions are sort of stabilized. So he is sticking to the script that there is room for continued policy normalization. So for us, we think December will be the most likely timing for the next hike. 25 basis points is a bigger step than the last one. So he would need more time to reassess. But I think overall the bigger picture is the BOJ is intending to raise rates over the next year. So that is good for the yen. And I think even locally, you look at the big pension funds such as GPIF, their upcoming reallocation sort of plans ahead of October, that will sort of boost the repatriation flows back to Japan, especially on the equity side.
Right. Alex, you're saying that the CNY, the Chinese renminbi, could head to 7.3 by year end. We're at, 7.11 right now. What would give?
So I think for our dollar CNY forecast is a combination of a stronger dollar profile, and I think that the PBOC does want a weaker yuan. Like looking at the economic conditions, you talked about global growth. It is sort of stalling. Especially from China. Looking at how commodities are faring, we downgraded our China forecast to 4.7. We think the economic momentum is very weak. So I think for the PBOC, the easiest way out of it would be to sort of have a weaker yuan to support the exporters on that front.